Assalamualaikum to Sazwan, my name is Shafaizil. So my group would like to do a presentation for this project assignment. So let's start with the introduction to this project assignment. So what is vertical analysis? Basically, vertical analysis examines the relationship between statistics in a single reporting period and at a specific point in time. The vertical analysis of an income statement, for example, causes each income statement item to be recalculated as a percentage of net sales. While for horizontal analysis, on the other hand, look at numbers from financial statements across a long period of time. For the purpose of analysis, all numbers on the balance sheets and income statement will be stated as a percentage of the base year amounts. So let's move to the background of company. Vitrox was established in 2000 by Chu Jiangyuan and Steven Xiao Kok Tong. And in 2004, Vitrox was converted into a public limited company and adopted the name of Vitrox Corporation Berhad. Vitrox design and manufactures innovative, leading-edge and cost-effective automated vision inspection equipment and system-on-chip embedded electronics devices for the semiconductor and electronic packaging industries.
Malaysian Pacific Industries Berhad, a member of the Hong Leong Group, is principally an investment holding company that engages with the subsidiaries of manufacturing, assembling, testing, and sale integrated circuit, which is semiconductor device, electronic component, and lead frame to the customer worldwide. So MPI is one of the company that major in semiconductor product. MPI is incorporated in Malaysia under Companies Ordinance 1940 to 1946 as a private company on October 5, 1962 under the name of Federal Paper Products Limited. So MPI is one of Bursa Stock Exchange, which is the current share price as 6 July of 2021 is RM41 ringgit.
Hi and Assalamualaikum. My name is Norina Ashkim Bisham. So today I would like to present about the MyEJ. The major service suppliers that presently use our e-government services and solutions such as Dewan Bandaraya Kuala Lumpur, Jabatan Insolvensi Malaysia, Jabatan Pengangkutan Jalan, Polis Diraja Malaysia, Tenaga Nasional Berhad and Telekom Malaysia Berhad. This company sector is technology.
For the vertical analysis, let's start with the property, plant and equipment. As we can see on the chart, for the 3 consecutive years, it shows that the percentage of common size for each year went down from year 2017 to 2018 from 27.22% to 26.93%. And same goes to year 2019 with 16.7%. The effect of the company is they might have to reduce the allocation on capital expenditure as the changes in percentage shows that in 2018 with 16.71% and dropped drastically by 36.13% in 2019. Next is account payable. As you can see on the chart, for the 3 consecutive years, it shows that the percentage of common size for each year went down from year 2017 to 2018 from 17.07% to 14.56%. And same goes to year 2019 with 11.7%. The effect of the company is they can plan their purchasing plan as the changes in percentage shows that in 2018 with 0.62% and dropped drastically by 18.65% in 2019. Other than that, account receivable. As we can see on the chart, for the 3 consecutive years, it shows that the percentage of common size for each year rose from year 2017 to 2018 from 25.40% to 27.20%, but it went down again in year 2019 with 20.49%. The effect on the company is they can measure the company's liquidity or ability to cover short-term obligations without additional cash flows as the changes in percentage shows that in 2018 with 26.33% and dropped drastically by 19.34% in 2019. Lastly, inventories. As we can see on the chart, for the 3 consecutive years, it shows that the percentage of common size for each year rose from 2017 to 2018 from 14.70% to 18%, and same goes to year 2019 with 18.8%. The effect on the company is they can avoid the possibility of losing market share and profit from future sales as the changes in percentage shows that in 2018 with 44.46% and increased again by 7.52% in 2019.
So we go to vertical analysis of MPI Berhad. So this is financial position Malaysian Pacific Industry Berhad for the year 2017 to 2019. So we go to the common size side. You can see at the below property, plant and equipment for the MPI Berhad has decreased from the year 2017 until 2019. So this shows this company is not hold their non-liquidity asset for too long. It is not good for the company because this is a non-liquidity asset that we cannot liquid that in a short time. So next we go for account payable. Account payable for MPI Berhad was also decreasing from the year 2017 to 2019. The decreasing is a high percentage, which is about 6% for the 3 years. So account payable, as we know, uh, the company has to meet the short-term obligation. Mean this is the debt. So if the account payable of the company is high, there is a problem with the company. So we go to account receivable. So as you can see, the highest account receivable value is on 2018, which is in that year, the MPI Berhad is offering their business in credit term. So this is not good. So the good is the company they offer the cash basis. So in 2019, the account receivable has decreasing to on 7.2%. So the 2019 account receivable remained as 24.49%. So inventories. What is inventories? Inventories is about the good that available or raw material that used to be make a product or services and make sale. So as we can see, the inventory from 2017 to 2019 increasing. This is because the sale of this company also increased. So they need a big inventory to meet their demand or order. So as you can see, the inventory changed for the year 2018-19. For 2018, the change was 44.46, which is the highest for the 3 financial years. And for the account receivable on 2019 is negative, so it's a little bit different. And same to like account payable and the property, plant, equipment.
So I would like to present about the vertical analysis for my EG. Inventories in common size between 2018 and 2017 increased to 0.38% but slightly decreased to 0.32% in 2019. This is also the same when it comes to changes in percentage, where in 2018 was 87.68% and dropped drastically by negative 4.47% in 2019. The common size in account receivable between 2017 to 2019 was increased. The percentage changes also increased from 2018 to 2019, which is 3.93%. This is good for the company that can make the total asset increase and sales. Property, plant and equipment was decreased between the 2 years, where in 2017 was 40.46% and decreased down to 32.10% in 2018 and to 29.41% in 2019. This affects the percentage changes in 2018, which result negative 18.77%. But there is an increase in changes of percentage in 2019, which is 6.71%. Accounts payable in 2017 and 2018, there was an increase in common size, which is the same as the change in percentage. But in 2019, there was a huge drop in common size, which is 9.93%, and change in percentage is negative 35.91%.
For overall comparative analysis in vertical analysis for Bitrot, MPI, and MyEG company for the year 2017, 18, and 19, we can see overall property and plant equipment, the MyEG has shown a higher decreasing percentage from the year 40.46 in 2017 to 29.41 in 2019. So this is because MyIG is a company with a digitalization sector or product. So they need more space to place their server. Next, we go to account payable management. As you know, when you manage the account payable, this is the critical part on a business. So, as you can see, MyIG has higher decreasing percentage on their account payable because they more to the cash basis. That means MyEG is offering services, so they do not to have a big capital in running their business. But for the account receivable, you can see MPI Berhad shows a good management on their receivable. This is because the company account receivable is decreasing on the year 2017 and 2019, which is valued by the common size from 16.91% to 11.15%. This shows company are decreasing their policy on credit. So MPI Berhad is more on cash basis when doing a transaction. Last, for overall comparative analysis for the inventories. So as you can see, Vitrock has the higher increasing on their inventory, about 44.46% for the year 2018. This is because the demand of the company product for semiconductor to meet the world technology demand. As we know, Vitrock doing the business with the product of semiconductor. From 2017 to 2019, there is higher demand on semiconductor. So the Vitrox has a big inventory to meet their order and their demands. As a conclusion, MyEG shows a good result on overall vertical analysis. This is because MyEG has managed their asset in a good way, and they also not adding their asset in dramatically. Other than that, MPI also can meet their short-term obligation. That is because they're decreasing on account receivable. For a good future, it's better if the three companies go for cash transaction for avoid financial burden in incoming financial year with the situation of economy is still on the bad mode. Inventory of the three company shows a positive movement. Nothing that curious about their inventory. If you can see on Vitrock, which is involving the energy sector or making semiconductor, this company has enough inventories to complete the order and demand around for all around the world. Moving forward, the three company must keep decreasing on their accounts receivable to avoid the late payment from the borrower.
For horizontal analysis, let's start with the profit after tax. As we can see on the chart for the 5 consecutive years, it shows that index number trend percentage for 2015 is 100% and it went down in 2016 and 2017 from 95.35% to 65.68%. It started to increase again in 2018 and 2019 from 79.38% and to 138.44%. The possible reason for these changes is might because of how the company managed to pay the expenses that have been deducted from revenue. Next is profit before interest and tax. As we can see on the chart for the 5 consecutive years, it shows that index number trend percentage for 2015 is 100% and it went down in 2016 and 2017 from 95.8% to 65.67%, but it started to increase again in 2018 and 2019 from 79.31% to 128.37%. The possible reason for these changes is might because of the amount of changes in cost of goods sold from sales and operating expenses. After that, we move to total operating costs. As we can see on the chart for the 5 consecutive years, it shows that index number trend percentage for 2015 is 100% and it rose in 2016 and 2017 from 124.37% to 181.77%, but it started to decrease in 2018 and 2019 from 56.7% to 17.72%. The possible reason for these changes is might because of the ongoing expenses incurred from the normal day-to-day of running a business. Moreover, cost of goods sold. As we can see on the chart for the 5 consecutive years, it shows that index number trend percentage for 2015 is 100% and it rose in 2016 to 115.62%, but it started to decrease in 2018 to 67.14%. In 2018, it rose drastically to 243.75%, and it went down again to 62.46% in 2019. The possible reasons for these changes might be because of the cost incurred in the production of the final product are fully recognized. Thus, later produced objects are more expensive as they require the labor and material cost at current price. So, lastly, the revenue. As we can see on the chart, for the 5 consecutive years, it shows that index number trend percentage for 2015 is 100%. It went down in 2016 and 2017 from 99.79% to 84.54%. But in 2018, it started to increase to 92.227%. It keeps on increasing to 107.94% in 2019. The possible reason for these changes might be because of the increasing of the number of customers, increasing of prices, and increasing of the frequency of transactions per customer.
So this is horizontal analysis of MPI Berhad. So this is financial performance Asian Pacific Industries Berhad, and this is the trend analysis graph for 5 years 2015 and to 2019. As you can see, the revenue of this company increased year by year. This is because the high demand of the company products, which is semiconductor product. And in 2016, there is also because due to better contribution in Europe market. So 2016, MPI has get a project for Europe market to supply the semiconductor products. So next, we go to cost of goods sold. When you make higher sale, your cost of goods sold will be increased. This is because the increasing of the cost of goods sold due to higher price of raw material or due to higher of product demand. So this is the challenge for the company to make sure the inventories position in a good position. So next, we go for the total operating cost. The higher total operating cost is on 2016. This is because for the 2016, the highest operating cost factor is about the high full price of transport and the high demand of workers' wages due to economic development in this country in year 2015 to 2019. So in 2016, there is the peak of economy, so the interest rate also rise. So people face with inflation, so the demand of wages is high. So they need to pay a higher wages for their workers. So next, we look profit before interest and tax. As you can see, the movement revenue is increasing. For the year 2017, the highest profit before interest and tax compared another year. Due to low revenue for the year 2015 to 2019, the profit before interest and tax also low. In 2016, the decreasing of profit also because of the highest operating cost that they bear. Lastly, we go for profit after tax. As you can see, the profit after tax of MPI increased in the year 2015 to 2017. This is because there is the early session of semiconductor demand. However, there is decreasing in 2018 to 2019 due to the another early entry in the same sector, which is many company has go for semiconductor product. So government political issue and the economic situation also the rising of interest rate and the financing cost also the reason why the 2018-2019 profit after tax is decreasing. For that, thank you.
The horizontal analysis in MyEG, the revenue as in the chart is uptrend in 4 years, which is from 2015 to 2019. Cost of sales trends were uptrend between 2016 and to 2019. MyEG total expenses is 2016 to 2018 was uptrend but going down to 244% in 2019. This is due to the company wanting to increase their net profit. Profit before tax increased between 2016 and 2017 but a downtrend in 2018. This shows that in that year, the company degree operating leverage is lower. That is why the profit before tax is less sensitive. In the profit after tax, but there is a downtrend in 2018 but going upward again in 2019. So for the overall comparative analysis horizontal, based on the revenue, the trend shows that MyEG shows the better performance, followed by Vertox, and worst performance is MPI. For the cost of goods sold, different companies have different trends. Vertox will be the best, and followed by MPI and MyEG have the worst performance. Operating expenses from the best performance to the worst is Vertox will be the best company and followed by MPI, and the worst is MyEG. Profit before tax MPI is the best performance in EBIT because MPI shows decreasing trend line between 2017 to 2019, which is from 163.70% to 124.30%. Profit after tax, the first company will be MyEG, second Vertox, and last MPI. MyEG performance shows an uptrend in 2016 and 2017, but a downtrend in 2018, which is 185% and move up drastically to 444% in 2019. So in conclusion, MPI needs to step up their games to increase their revenue. For example, in the event of a decline in revenue, they may bring new goods to the company, to the market, remove existing product from the market, rearrange sales, lower pricing, or take a variety of other actions, many of which are unneeded or ineffective in the circumstance. For the cost of goods sold, MyEG shows a bad example which can affect the gross profit for the operating expenses. The other two companies can make Vertox as the best example in how they manage their expenses. Profit before tax, MyEG needs to lower their tax reduction. Lastly, the need for net profit to increase just the same as revenue. That's all from me. Thank you.
Let's move to the recommendation. Firstly, set the company's planning. Specify financial goals for your company and take the time to set targets such as income targets or new customers. It's because when the company develops a plan, it can identify where the strengths and weaknesses lie. Next is review company's goals. It is therefore relevant the progress is verified to date and that the action items of the company are met along the way. Review your company's strategic objectives and future planning quarterly so that the goals can be achieved without any problems. Moreover, rearrange expenses. The first thing company could do in efforts to improve the weaknesses of their company's financials is by arrange a deferred or periodic payment plan for larger expenses. Next is offer markdowns. For the markdowns offering, the company could apply it to full price products or services to attract sales and move surplus stock or discontinued products. Finally, check the finance monthly keep track of these records. To do this at the basic levels, the company need these financial statements, which is a balance sheet that evaluates the company assets, liabilities and net value. For the cash flow statement, it reports on how the cash gets generated and used. Next is profit and loss statement. It measures on how the company business spending compared to what the company has earned. Thank you.